Hello friends, today is my 28th presentation for the team of finance and accounts professionals, and the subject is financial reporting of overheads in profit and loss account part 2. This includes 36 additional causes that can adversely impact the financial reporting. Overall, this is my 59th presentation considering all the YouTube presentations that I have made so far. What I have included in this is a recap of the 5 overhead expenses which were included in my part 1 of my 27th presentation, then additional 7 overheads uh, uh, like communications, travel and conveyance, printing and stationery, legal and professionals, business entertainment, company maintained guest houses, and donations. Now, a recap of the overhead expenses included in my 27th presentation. Uh, there were number one was lease rent paid on assets taken on hire. Number two was repair and maintenance of buildings. Number three was overhead. Number three was repair and maintenance of machines. Number four was repair and maintenance of others and other any other items other than buildings and machines. And uh, Overhead number five is insurances. Now there were 15 subheads which were analyzed for the expenses vis-a-vis these 5 major overheads, and 44 causes were identified in my previous presentation. Now this is an overview of this today's presentation, that there are 7 more overheads being taken up. Communication having 10 subheads for expenses and 8 causes that can affect P&L reporting. Travel and conveyance 6 subheads and 6 causes. Legal printing and stationery, legal and professionals, business and entertainment, company maintained guest houses, donations, etc. Overall, 40 subheads have been analyzed for the expenses, and possible potential causes 36 which can adversely affect the P&L reporting. Overhead number 6, communication cost. It 10 subheads have been identified under this overhead, which is telephone expenses, internet and data services and intranet, license fees for the communication network, uh, assuming that costs are not part of the IT and systems as per the discussion of the CFO. Number 4 is cost related to the online connectivity between the company servers and the IT systems with vendors or channel partners or customers, etc. That is remote connectivity. Then video conferencing service related cost, postage and courier services cost, printing and copying expenses, fees for technical experts for setting up the telecommunication systems network, training and development related cost, communication software like email software, messaging apps, and cloud based apps, etc., in case these are not part of the IT expenses. Now, please note that costs related to the fixed assets related to this are not included in this, like communication platforms, equipment like video conferencing, EPBX, servers, IT infrastructure equipment, etc., because they are supposed to be depreciated cost or lease rentals, which can be included in the finance head expenses fixed assets category to comply with the regulatory requirements. Now, for the overhead number 6, that is the communication, uh, there are 8 causes that can affect the accuracy of the financial reporting. One is the oversetting or undersetting the expenses. Number 2 is inaccurate expense allocation. Number 3 is lack of expense monitoring controls, omission of some expenses, non-compliance with the regulatory compliances such as wireless protocols or telecommunication related acts, improper authorization of the communication expenses, approval of vendor service providers bills not in line with the approved purchase orders or agreement, and therefore uh, allowing higher amount of the payments, misusing communication facilities for personal use by considering these as official such as telephone and Wi-Fi and video calls, etc. Overhead number 7, travel and conveyance. It includes 6 subheads, namely employee business travel. Number 2, commuting expenses to and fro from from the home to the office or work or back. Then third is vehicle lease and rentals, and fourth is local conveyance like cabs and autos and metros, etc. And metro expenses. Then company owned vehicles day to day for official running, and supporting expenses like travel insurance, visa fees, etc. So the further details of these are given against each point. Now, 6 causes that can affect the accuracy of the financial reporting of communications are overstating or understating expenses, falsified receipts, creating the fake receipts for any of the above types of expenses, personal use of the company vehicles, personal travels, few personal declaring personal travel expenses as official, weak internal controls to monitor budget and actual expenses, improper authorization of the expense and travel and conveyance vouchers or claims which are beyond the entitlement norms. Overhead number 8, printing and stationery costs. There are three subheads identified. One is the office supplies like cartridges, pens, pencils, colored highlighters, engineering drawings, etc. And number 2 is stationery. This includes the items used for business communication such as pre-printed forms for each function, uh, photocopying papers, letterheads, envelopes, business cards, etc. Then outsourced printing services like functional documents like purchase orders, notes, invoices, gate passes, etc., which are used in bulk, and annual financial reports, brochures, etc. Causes, 5 causes have been identified which can impact the accuracy of the financial reporting. One is the vendor invoices, passing vendors' bills related to these without three-way matching of the purchase orders and supplier invoices, and quality and quantity of the verification of the office supplies, stationery suppliers, or printing works outsourced. Number 2 is personal use of these. Number 3 is poor expense tracking. Number 4 is overstating or understating of the printing and stationery expenses. And number 5 is omitting some of the office expenses, printing and stationery expenses deliberately. Overhead number 9, legal and professional expenses. This has got 5 subheads. One is the legal expenses. Second is the fees paid to reimbursement to the technical consultant, fees paid to the reimbursement to IT consultants, and fees paid to reimbursement to management consultants, and fees paid and reimbursement to the finance and taxation consultants. So let me go one by one. Legal expenses, fees primarily paid to the advocates for statutory filings, regulatory compliances, contract reviews like agreements, license fees and other renewals, other statutory fees and litigations, court appearances, etc., and patent costs. For the technical consultants like engineering consultants, architects, interior designers, MEP designers, quality control and assurance, industrial designing, new technology acquisitions. Number 3 is fees paid and reimbursement to the IT consultant like software developers, IT infrastructure, ERP implementation, IT security, and so on and so forth. And fees paid to the management consultant like for strategic management services, sales and marketing, HR firms like change management, productivity enhancement, business process improvement, and so on and so forth, including benchmarking for best practices and artificial intelligence implementation. The last one is fees paid and reimbursement to the finance and taxation consultant like auditing services, tax matters, due diligence, and advisory services for M&A, JV, making investments, borrowings, public issues, merchant bankers, underwriters, bookkeeping assistant, and so on and so forth. List of 5 causes that can affect the accuracy of the financial reporting or communication of such cost. Reporting of actually legal and professional costs. Sorry for that. Fictitious legal fees, creating fake invoices from law firms to inflate expenses. Improper allocation of the legal costs. Uh, Hidden conflict of interest, not disclosing a conflict of interest with the lawyers, accountants, and or hired consultants. Fourth is excessive or unnecessary fees, engaging legal or professional services that are excessive or unnecessary for the situation, not negotiating it properly, potentially due to kickbacks or poor internal controls, and negotiation not at arm's length. And number 5 is personal legal expenses disguised as business costs and including in this official legal expenses. Over number 10, business entertainment. Usually, business entertainment expenses are typically not fully deductible as overheads. Tax authorities often limit deductions for these costs due to potential or personal enjoyment. These expenses can be under 3 subheads: meals and drinks with clients or potential clients, business meals with employees, team building events, holiday parties, offsite, etc., and reasonable travel and lodging expenses. 3 subheads. The 3 causes that can affect the accuracy of financial reporting is number 1 is lavish or extravagant entertainment, personal entertainment expenses disguised as business expenses, and treating bribes as business entertainment. Overhead number 11, company maintained guest houses. Now it has got six subheads: rent or lease expenses, utilities like electricity, water, gas, etc., used in the guest house, cleaning and maintenance cost, repair and maintenance for any of the jigs, fixtures, furniture, etc., supplies, This account would include toiletries, linen, towels, food and snacks, etc., and other supplies, and other expenses like insurance for the guest house or internet expenses, phone expenses, and maintaining staff fees, etc. Three causes that can affect the accuracy of financial reporting is: number one, expenses related to the employee's personal use without proper approval or paying the appropriate charges for, or employees not paying the appropriate charges for availing services at the guest house and booking these in the company account. Fake booking, expenses related to the fake bookings used for personal use, and inflated invoices for cleaning services, repairs, food supplies, etc., in collusion with the vendors and claiming kickbacks by the guest house administrator. Overhead number 12, donations. The donations are like most other expenses, not typically not reported directly on the P&L account because they are not part of the revenue generating core business activities. They are normally part of the statement of cash flows or statement of activities. Now these can be of different kinds like cash donations to charitable organizations, NGOs, donated goods to charities, valued at fair market price, volunteering the time by the employees who devote to such activities, if recorded at fair market value, non-profit sponsorships to community events like CSR goals, initiatives aligned with the business corporate social responsibility, if not directly tied to the company promotion, educational funding for the students or the institutes, disaster and humanitarian relief support, and value of that, and donation made to politically affiliated organizations. List of 6 causes that can affect the accuracy of the financial reporting of donations. For this overhead, overstating donation value, misrepresentation of the donations, lack of transparency, fictitious donations laundering, donating to self-dealing organizations, that means sister companies, and non-compliance with the applicable laws and regulations as applicable. So you can refer to more on this in my second book titled Profitability and Ethics, Essential Ingredients for Business Success. The book has been listed in the Amazon as per the links I have given both for India and international operations. And you can also refer to several of the blogs in my website, which address is given here. Please refer to all industries because another industry, real estate, is also included there. Then you can also refer to some of the other articles of your interest on the Facebook and LinkedIn. Thank you very much.